Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer, Brian Johnson. And let's catch you up on where we're at in the markets. Now, last week we spent most of the week, if not all week, wandering basically sideways. One of the things to bring up was back here on the 10th. We entered this range of about 11.3 to 11.6 or so. And we stayed there for, wow, a good week and a half before we finally got the break we were looking for. Took a lot of time, took a lot of patience, especially if you had been looking or hoping for a trade. It finally came on the break of this overhead level 11,650. So, what did we do? Ran straight up. If you were patient enough to wait for this, it was a beautiful trade. Very well done. 11,700 was another level I had been giving out as a go long moment. So 11,650 or 11,700 if you waited for it. I pulled it off very nicely, made some money off of it, right into the 11,950-ish mark or so, and now we're pulling back. And guess what we're doing? Much of the same. Up into here, moving sideways, up into here, moving sideways. If any of you have been following me for any length of time, you can remember back just a few months when we were slowly grinding our way upwards, and it was up, pull back, up, sideways, up, pull back, up, sideways, up, pull back, up, sideways. Slowly grinding our way upwards. We may be starting something similar to that. So in that same sense, let's just keep doing what we did at that time, and that is using good risk management and patience in our trading. The new levels to watch are below 11,650 for your trade short and above 11,950 for your trade long. It's pretty well defined in through here. So I would tell you to wait until you saw a move either above or below these levels before you take your long or your short position. From the daily, you can see the same situation setting up, 11,650. Back above 11,950, make sure that it clears the 200-day moving average first. So when I say above 11,950, obviously I don't mean 11,951, below 11,650, not 11,649 or something like that. Give this one here a little bit of room. So above 11,950 is your entry to the long side. Make sure it clears the 200-day before you take that trade. Now, if you want to get more aggressive, the more aggressive trade is above 11,900. That's also actually a pretty good trade right there. So back above 11,900 makes for a nice setup to the long side. But then, of course, you'll be wanting to watch that up and into the 11,968, which is the 200-day. Still a good way to make potentially here 40, 50 points, even before you get to the next larger entry, which is then above that 200-day moving average. Watch that into tomorrow as well. One of those two marks, as soon as they're broken, should give you some really good opportunity at some trading potential. NASDAQ is also consolidating sideways. It was up. It moved into a very nice bull flag, popped up and through the top of that into the 2390 area. My larger areas have been 2,400 to the long side, which we have not hit yet. That's the most conservative place to get long the NASDAQ at this point. On any kind of a pullback, I really don't like shorting the NASDAQ per se all that much, but if you're going to wait or if you're going to go ahead and go short here, you want it below 2290. And then back into the 2265 mark, you'll want to watch that very closely as well, but the NASDAQ doesn't move quite as quickly as the Dow does. So in this case, 2290 to 2265 is actually a really nice trade. 25 points would be very nice on the NASDAQ to the short side. Then, of course, back below there should make for even a larger trade. I like the 2290 as well because if you look at the NASDAQ daily, you'll see we have ran away from the 200-day moving average, which is rolling in and around the 2290 area. Hence another reason to wait until 2290 for your entry short on the NASDAQ. Let me just put in a disclaimer. I'm not big on shorting the NASDAQ. I prefer to go long the NASDAQ. But if you like to play the Qs, and you don't mind shorting the NASDAQ, that is the place to be watching, 2290. And then 2400 still the bigger, better area to the upside. If you want to jump in early, 2290 is fine, but over 2400 is probably the better, more safe place to get long the NASDAQ at this point. From a weekly perspective, look at what the NASDAQ's done over the last couple weeks. This big shot to the upside, not only breaking these moving averages. Last week we talked about whether or not we would hold these moving averages. Lo and behold, we have. 2 weeks over and above these bigger overhead areas of resistance. Coming back to test it last week, almost coming back to test it so far this week. 2 days left. We'll see where this candle closes, but as long as it stays up here, certainly no reason to think that it couldn't at this point. But if it will stay up and above these moving averages by the end of the week, guess what? Very bullish. Looks like a high base. Should lead us into and start looking for some more bullish action into the next few weeks of trading. So far so good for the bulls. Obviously 2 days left before this candle closes. Anything can happen, but at this point that is what you're looking for in the bigger time frame. SPX 60 minute also been up, and then a little more up, and then even some more up since then. Our marks were 1190 and 1220/1230. Really 1230 is what I had been giving people. So 1190 short, 1230 long. We finally broke the 1130. Our 1230 area, watch this, perfect. Move up, come back, retest, and blast away. Just a textbook move from a technical analysis standpoint. Obviously offering good opportunities to make some really nice profits off of this. 1230 to 1250. So 20 points should have been very doable out of this particular trade. Worked out very, very nicely for those of you that had been playing along. We have now pulled back into that 1230-ish mark, stopped at the 20-period moving average here, 1242. You can see how it's really trying its best to hold this 1230 area. So with that being said, I like short back below that 1230. I really quite honestly would wait for the 1225 or even more importantly 1220 area for your short position in the SPX. I really like the 1220. That of course being your next level of heavy lower support to break before you take your short position. To the long side, above 1245. And you can also sneak in above 1250, but you really want this thing up and over some of these higher levels, which we'll see here on the daily. It would be really nice to get it back and over 1260, and then 1274.75 being the 200-day moving average. So in line with what we're seeing with the Dow, you're going to be wanting to watch overhead 200-day moving averages. Those are very, very important to a lot of the indices going forward. So far, what do we have? Move up, sideways, move up, pull back, move up, sideways. I don't know, but that seems to be the trend when we get into these kind of bull moves. So now, another day of pullback. Who knows? Could be. 1220 is your answer. Watch for breaks below the 1220 mark before you take that short, but certainly worth an opportunity and a shot to the short side if you can get it to blow through 1230, 1225, or 1220 ultimately. The VIX Daily, confirming everything we're seeing here as it consolidates sideways. We're still stuck in that range between 30 and 46 or so, 48, showing that the markets are still in a state of, I'd say they're on alert. How about that? They're still in a state of, you know what, we're going to be cautious. We're not exactly sure where this market's going. So they are being cautious. However, slowly over the last 4 weeks now, slowly starting to bleed our way back down into these lower levels. Anything over 20 for me is more elevated, and that's where we have been for quite a while now. So it might take a little bit of help by like a Christmas rally maybe to really blow this VIX back down and into these lower levels again. But as it stands right now, stay on guard, stay cautious, especially if you're playing options. Heavy drops in the VIX can have a major effect on the premiums if you're playing the options market. But as you can see, what we're really looking at is confirmation in the markets. They are confirming what we're seeing. As we drift higher, this is drifting lower. So keep that in mind. Everything's still looking just fine from the market and the VIX standpoint. Not real worried about the VIX till we get back into the 20, and then we'll start paying more attention to it yet again. FAS on a 60-minute, also stuck in this little sideways consolidation here. This is actually in what would be a big channel to the upside. It comes out, and it's actually very prominent on the FAZ, which we will get to in just a second. However, my next new trades for you, they were back above this 1350, 1340-ish area here. Made for, once again, a very nice trade to the long side. Should have been able to pull about $1 out of that particular trade. Now we're stuck in this consolidation again. Next trade, above 14.75, below 13 bucks. Those are your two marks to be watching on the FAS if you prefer to trade that. Below 13 and above 14.75 for your long and your short. From a daily perspective, here's the bigger channel. Look at this. And I still like those same type of entries based on a daily. But right now, up, sideways, sideways, maybe a little bit of a pullback here. We'll see. Anything back below these levels or back above those levels give you really, really nice opportunities to go long or short again. FAZ. On the 60-minute, look at this very, very nice tight channel. I love it. Love it. It's very well defined here. Like what I'm seeing out of this. You really want something up and over probably to be the most cautious. 47 or 47.50 for your next entry to the long side. So we do have a little bit of work to do here on the FAZ. Anything below 42 is your next shorting opportunity. And my target to the downside would be potentially this nice blue line we have drawn in here. Not sure we'll get quite that far down, but below 42, still a great opportunity to play this to the short side. Should be able to make some profits off of that, as well as along above the 47 mark. This is something I'm also watching in my trading room. TZA, we've already been watching that now for the last week, week and a half. So there's quite a bit going on in there as well. All right, that brings us back to the beginning. Oops, FAZ Daily. Look. Straight down, straight sideways, no indication of direction yet. No indication. Anything back above 47, it's the 200-day moving average, same as it is on the indices. Keep those in mind. Back below $42, man, 38 could be $40 and then 38 is where I'd put my lower support lines on that one. All right, so that really does finish it up for the video. Okay, you have your new levels. Last week wasn't much to talk about except, hey, watch for breaks of this, watch for breaks of that. Eventually we did get that. Could this have been an inverse head and shoulders? Yes, absolutely. So the target on that would be, I don't know, right about where we're at now, maybe just a little bit above. So if we creep up a little bit more, you have your entries to the upside, you have your levels to the upside to be watching on all of the indices. Trading room still wide open. If you'd like to come in, by all means, please come in, check it out, see what you think. And the newsletter, if you like these types of videos, if they're very informative and help you out, try out the newsletter. 28 bucks a month, buck a day. You get them every day except for Saturday, and it's really good information to have at your fingertips. Even if you're even if you do very well or are doing even okay in your trading, it's always nice to have a second opinion. And in that manner, give the newsletter a whirl. All right, guys, we'll be back with you again later. Have a good one. Bye.